What's up, everybody? Welcome to Dave's Daily Dive, where I go ahead and dig in the charts, talk about the major market indexes, and again, I'm not going to leave you hanging. I also go ahead and give you 5 Zacks Rank #1 strong buy stocks that are breaking out to new highs. So you get a little bit of a macro perspective, and then you get some individual stock ideas that are actionable items for you to take a look at. All right, so first, what I want to look at, as always, the S&P 500. Now, some people will argue with me about this, but I don't care. You can do what you want in your videos. I've been going off of this, what I call the big fib, from the June lows to the August highs. And that retracement, that 76.4% retracement of that move, provided some downside support, and then the market broke out from there. Now these levels, these extension levels, have been hit, obviously, since then. If you notice, we're starting to slow a little bit right at the 76.4% extension. I really think that the 100% extension is going to be the target for this market in the intermediate term. So that's 25.75 that I have as a short-term resistance here on the S&P 500. It's going to be interesting to see if the market has enough oomph to break on through that level, but we'll just have to wait and see. So keep your eye on 25.75 upside, and should the market start to creep back down, you're going to have these other fib levels potentially providing support: 25.33, 25.23, okay? And then obviously all the way down to 24 or 24.90, although I do believe 2500 would obviously step in ahead of that. So those are a couple key levels to look for on the S&P 500. Now, for the Dow Jones, today was the first day in the history of the Dow where intraday we got above 23,000. So that's pretty significant, and the mega caps have definitely benefited. One thing I do want to point out is that, see, in August and May, the market kind of came down underneath the 50-day moving average, came down to retest the 50-day in August, but we have been trading above the 50-day basically since mid-May. Right now, that level, 50-day moving average, is all the way down at 22,198. So if the market stalled out, I would expect a 50-day to get retested, but right now it's just keeps on trucking. And here we are in earnings season, which typically you get a little bit of volatility around earnings, as just kind of sloshes back and forth while investors trying to get ahead of the next earnings trend that's developing. As for the VIX, though, in terms of any real volatility, we had sort of that double dip. So this was all North Korea stuff going on over there, right? Some back and forth. And since the details of this tax plan have been unveiled, really hasn't been much in the way of volatility, or nothing much at all, really nothing. And that's what we're seeing here on the VIX also. So not a big spike in volatility, just kind of going sideways. The VIX is still just 1031. Not too much going on, although it has picked up just a bit over the course of the last week or so. So in the grand scheme of things, a VIX level of 10 is very, very low still. And even when we've seen the spikes, really 17 has capped it. So hasn't been much of a move. All right, so let's take a look at 5 Zacks Rank #1 strong buy stocks that are breaking out to new highs, surging along with the rest of the market. The first is Applied Materials, ticker AMAT. And this has been great because there was a little bit of consolidation happening in all the semiconductor business, all the panel business, all of that, into June, into the summertime, was chopping around a little bit. Since then, we've definitely broken through the top end of that range. So now here's the tough part. As you're trying to chase these things, where do you put a stop loss? So I'm thinking what you really want to do is use like a swing low, and that's what you have here. You can come here, getting the early October swing low. You can put your stops down below that level and just kind of run with the rest of the market. The 50-day moving average is still well below the current price action, down at 47, and it has a positive slope, so it's moving in the right direction. Very bullish here for Applied Materials. They are overbought on the commodity channel index. Now, this is one of my favorite things here, is you get an overbought commodity channel index, comes down to the zero line when the stock is near highs, and it bounces at that zero line and ends up extending the rally. That's a nice continuation pattern I've seen. So here it is looking a little bit overbought right now, but again, for the more impatient traders, you can buy here, put your stop loss down under that swing low, or just hang on a bit, see if it comes down to flirt. Next stock, the big Chinese company Baidu, ticker BIDU. Similar story here, where you have this consolidation in August. Not much of a consolidation, though, considering where shares were, right? So June, they ramps up from the 170s all the way into the 230s, chops around a little bit, and then now we're on another leg higher. Now remember, these are Zacks Rank #1 strong buy stocks, so that doesn't mean a bunch of us at Zacks sat around and said, you know what, let's buy this. Rather, analysts out there have been increasing their earnings estimates for shares of Baidu, so perhaps these increased estimates are justifying the move higher. So here you have it, right near 52-week highs. It closed today at 270.32. The 50-day moving average all the way down here at 235 and change. And again, you could do the same sort of play where you could use the October swing low as a stop loss if you like, if you want to chase, or just kind of sit back and hope that there is a retrace where you can get filled a little bit better. But it is kind of tough trying to chase these sometimes. But you got to have courage because the market's been rewarding chasing, which has been true. Now we've got Facebook, which is setting up an interesting little pattern. So you do have some flirtation with the 50-day moving average that's occurred on several occasions. And then most recently, they tried to pull it down below, but it didn't work. And Facebook came fighting out of the gate. Now look at this. It's nice little top here at 175. After retracing below the 50-day, now we've got momentum. It's starting to break out. I think Facebook is mid-breakout right now. This is something you can buy, and you can put your stops south of this 170. You can even get all the way down here to 160. That's a little more than 10%, I believe, from where we currently are. That's a nice little stop loss. And with a stock like Facebook with the good earnings behind it, hopefully this can continue on to the upside. But I do like this little pause for the cause and then break out to the upside here on Facebook, ticker FB. One that I haven't talked about here in a while for sure is Nintendo. You remember everybody freaking out when the Pokemon Go game was happening? Well, it's much more than that for Nintendo as they've developed a new system. And look at this move that they've made since the March lows, rallying higher, breaking sideways, flirting with the 50-day again, and now they're beginning to make another move on through to the highs. So similar pattern here where the buyers kind of get exhausted, come back in, now we consolidated below, and then have gone off to the races again. So same sort of scenario. You can go long Nintendo, put your stop loss below. In this case, the September swing low also happens to coincide to this with this June high. So that should give you a little bit more confirmation there. That's Nintendo, ticker NTDOY. I know how much you guys love those 5-letter tickers. Now the last one I'm going to show you here is United Rentals, ticker URI. Again, a Zacks Rank #1 strong buy. Look at the surge off of those August lows after flirting with that 50-day. It's gone all the way up past 145, stalling out a little bit here. Perhaps there's a consolidation range that's about to get carved in. On this one, I would say be patient. See if it gets down to 140, just a few bucks off of where you are really right now. See how it interacts with the 140 level. Okay, I would allow this commodity channel index to go from this extreme overbought territory over 100. Hopefully let it come down to the zero line as the stock comes down to sort of those 140s. That'll set up a better sort of risk versus reward scenario for you there on United Rentals. Okay, folks, that's all I got for you here on Dave's Daily Dive. Be sure to check me out as editor of the Momentum Trader as well as the Surprise Trader here on Zacks.com. And as always, I'm on Twitter. That's right, Twitter. You can hit me up at Bartosiastics on Twitter any day of the week. Thanks so much for hanging out with me here today. Have a good one.